So today I'm going to be talking about foreign corporations that are required to file a U.S. tax return. Foreign corporations are required to file a U.S. tax return if they're engaged in a U.S. trade or business. So this generally means, they're operating a business in the U.S., they have a fixed place of business, an office, maybe some employees. This can also happen if there are partners in a U.S. LLC or limited partnership or general partnership. Then they'd be required to file a tax return to report their portion of the income. It can happen if it owns U.S. real estate and generates income from that real estate. One of the things a lot of people don't know is that if a foreign corporation doesn't file its U.S. tax return within a given amount of time, no tax deductions. That means 21% income tax on the gross revenue. That time limit is if you don't file before the IRS notifies you, no deduction. So if the IRS notifies you within 18 months of the due date that you should have filed a return, no deductions. But even if the IRS doesn't notify, if you don't file a return within 18 months of the due date, still no tax deduction. So if you're the officer, director, advisor, shareholder of anything to do with a foreign corporation that needs to file a U.S. tax return, make sure it's timely filed. Avoid penalties and interest, and avoid losing your tax deductions because that's quite costly. Additionally, if you have any questions, if you need to know if figure out if your corporation is required to file, we can help you. EsquireGroup.com, or shoot us an email at info@EsquireGroup.com. I hope you found this helpful. See you on our next video.